Gregg Smith is with us, and he's got a comment about what we'll see on the market after tax day, May 17th. You're expecting some kind of pop? Why?
Hey, good morning, Stuart. Well, the markets have been extremely volatile lately, right? And when I think back about the legendary Ace Greenberg of Bear Stearns, who I had the privilege of working for almost 30 years ago, when asked about the crash of '87, his simple comment was, stocks fluctuate. And as I look at around the environment today, I feel like we're in a 3S economy. The 3S's being sitting, spending, and speculating. We have more Americans sitting on their couches at home, and companies can't get them off their couch back to work fast enough. We have people certainly now spending, whether on their homes or on their pets or their kids. And I think we're going to have a big boon in vacation travel soon. And certainly we all have seen the speculation in the market recently, whether it's on silly stocks like GameStop, on cryptocurrencies, NFTs, and even spilling into the collectibles market like comic books, watches, and other things. So I believe that, there is a bit of an overhang here, that you have a whole class of investors that woke up this year, realized they had capital gains last year, and guess what? We all have to pay the tax man. Taxes are due May 17th next week. So I just question, is there a lot of selling in the market of people raising cash that maybe waited too long, and they are cleaning out their accounts to pay Uncle Sam next week? So that is perhaps one phenomena that might be going on in the market that folks aren't thinking about.
Okay, so you think there's a pop after May 17th, which is early next week. You think there's a pop? I mean, the market goes up, right?
Look, I think the market will continue to be strong. We all continue to hear about there's nowhere else to be. There is a big floor in the market from all the dollars that are being printed by the government. So I think that despite the volatility that we're all witnessing, if you continue to take a long-term view on equities will continue to work higher. Companies are in great shape despite the hiring and labor headwinds, even despite chip shortages and nuances that we see in different industries. Companies are doing great. Balance sheets are in good shape. We will see interest rates work higher.
Long term, I see it. Look, for 10 years, for 10 years we've said if there was a dip in the market, you buy the dip. And if you'd have done that for the last 10 years, you would turn out just fine and dandy. You would make money. Are you saying it's precisely the same thing now? We've had this dip. It's not a very big dip, but it's a modest dip. Are you saying you buy it now and you'll live to be very happy down the road? Is that what you're saying?
I do. I think you stick with your core holdings. I think when I joined you in March, I actually said the Cathie Wood ARK trade is sort of off the table right now. And, that probably marks the excess in the market. We saw the innovation fund, the ARK Innovation Fund peak around 160 back in February. It's now traded off to just around par. It's trading around 100. So I think we will begin to see a pick up in the market. And I think if you pick quality stocks, I recommend all the younger people around me that are asking me for advice about where to put their money, put it into some great ETFs and forget about it. So I do think the market continues to work higher. Things will be okay. Don't panic. And we will continue to see good days ahead. We do have a bit of an overhang, and we're going to have to pay a price for all the money that's being printed around there. So that's something our kids and grandkids are going to have to deal with. But, we do need to get back to a little bit of laissez-faire in the economy here and let people get back to work, because there's just way too many perverse incentives for people to stay home and sit on their couch, even when companies are offering them fabulous.
The crunch comes when the Federal Reserve stops printing all this money, buying all these bonds. That's when the crunch comes, isn't it?
That's right. I mean, look, rates are being kept artificially low right now, right? We need to see a pickup in rates. We all know inflation's coming. There's certainly a difference between measured inflation, what the government puts out, and the real inflation that you and I see when we walk around and we see the prices of things, right? And I think there's a big disconnect to that. So a combination of all that money that's out there, and people getting back to spending. And look, people have been saving. That's a terrific thing. We've become a nation of saver, which is very, very different than where we were in years past. So, but we need to get back.
One wrong word from the Fed, and you got a problem. One wrong word from the Fed, one misinterpretation of what they're saying, and you got a real problem. But for now, things are looking fine. Plenty of green. Gregg Smith, thanks for being here. We'll see how things work out after tax day. Sure thing.